we still have this consolidation going on in the market. So markets really haven't gone anywhere now for a couple of weeks. We've just been trading up and down, but we're compressing that consolidation. So if the market does break out of this little consolidation, we're going to continue to move higher near term. But here's what you need to know before the bell this morning. So markets came down again yesterday. We sold off during the day, came down and retested that 20-day moving average again. This primary trend line of the market since the October lows, and remember back in October last year, everybody was concerned that we're going back into a bear market. We're having this correction during the summer. We were down 10%. Lots of concerns about where things were headed. Then, of course, in November, we started this rally, and that also corresponded with the increase in liquidity. And since then, the 20-day moving average has continued to be the primary trend line to support this bull rally. Every time we've come down and tested this 20-day moving average, it continues to hold. Now, that confirms that the bull market is still intact, at least for the moment. And so yesterday came down, tested again. We actually tested it for the last 2 days, bounced off of it both days, have turned up. And this morning, because of Nvidia's earnings yesterday, we're going to have a big jump this morning, and markets are going to be back up at this previous top. So, again, so two things going on here. We still have this consolidation going on in the market. So markets really haven't gone anywhere now for a couple of weeks. We've just been trading up and down, but we're compressing that consolidation. So if the market does break out of this little consolidation, we're going to continue to move higher near term. And again, there's all indications of that. The only concerns are, and again have been, is that we continue to run at a fairly elevated rate in terms of the market. So in other words, when we take a look at the market overbought, oversold conditions, we're still pretty overbought. We do have a sell signal in place that'll probably reverse today. We'll see what happens today or tomorrow. If this market follows through, we'll reverse that sell signal again. That's not uncommon in markets where we are right now with a lot of bullish sentiment behind it. These markets can stay overbought for a fairly long time. The one thing we've got going on, though, of course, is this overbought condition of relative strength. That's been declining. So we've actually had this negative divergence between the markets and relative strength. So we need to see relative strength pick back up here to support this market if it's going to continue to move higher in the short term. And again, now these are short-term indications. This doesn't have anything to do with long-term, but in the short term, if we can improve relative strength, flip this buy signal, this sell signal back into a buy, this market can continue to move higher, at least for now. The question, though, becomes ultimately, this market's going to have to correct itself at some point. But again, that's always kind of the hard part to determine is the timing. You're going to get a correction of 5 to 10%. We've talked about this before. The problem is just the timing of it. And again, if we go back to last year, this time, really, if you'll remember in March, April, May, and March of last year, we had the Silicon Valley Bank crisis. Markets stumbled, and then we had the AI chase in April, May, June, and July. So 4 months, that market rallied fairly strongly. We were up about 16% in the first half of 2023. Then we had a 10% correction. So very similar to that rally, we've had November, December, January, February. So 4 months of this rally, just like we saw last year, same type of magnitude of the rally as we saw last year. Will this ultimately end another 5 to 10% correction? Probably. And 5% corrections happen on average every year. 10% corrections happen every 1.5 years. So again, we're well within the time frame and both of extensions of the markets, et cetera, that you're going to get a correction. But for now, again, all you have to do is watch this 20-day moving average. That's your indicator, most likely, that we're going to start a correction. As long as we can continue to sustain this, portfolio allocations are fine. All right, that's what you need to know before the bell this morning.